This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past few months, the US housing market has been moving through a period of adjustment. High mortgage rates have reduced buyer demand, while limited housing supply has kept prices from falling significantly. This has created a slower, more cautious market where activity is down, but prices remain relatively firm. This week, the latest housing signals suggest that the market is still in that holding pattern. Home prices in many regions remain stable, with only modest changes. At the same time, mortgage rates continue to stay elevated, limiting affordability for many buyers. However, there was a small but notable shift. New listings increased slightly compared to recent weeks. This gives buyers a bit more choice, even though overall inventory is still below long-term averages. So what's the real trend right now? The housing market is stalling rather than turning. Prices are not rising quickly, but they're also not dropping meaningfully. High borrowing costs continue to slow demand, while limited supply prevents a sharp correction. This week reinforces a slow and stuck trend. The market is adjusting gradually, without a clear breakout in either direction. So how does this hit your money? For buyers, affordability remains the biggest challenge. Even if home prices aren't rising rapidly, high mortgage rates keep monthly payments elevated. For homeowners, property values are holding relatively steady, but refinancing remains difficult due to current rate levels. For renters, the situation is mixed. Rent growth has slowed in some areas, but overall rent levels remain high compared to previous years. In practical terms, housing costs are stabilizing, but at levels that still put pressure on monthly budgets. Looking ahead to next week, markets will be watching for new data on home sales and mortgage applications. These indicators will help show whether buyer activity is starting to pick up, or if the market continues to move slowly under the weight of high rates. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with